Hello friends. Recently our Finance Minister NirmalaSitaraman had presented Union Budget 2022-23. So in this video we'll analyze the budget, what is our view on the budget and how the budget will impact sectors and companies. So friends, are you ready? Let's go. So our honorable finance minister mentioned this budget as Amrit Kal. So what are the goal of this Amrit Kal budget? Number 1, focus on growth and all inclusive welfare. Second, promoting technology enabled development, energy transition and climate action. Third, virtuous cycle starting from private investment crowded in by public capital investment. And there are 4 priorities she mentioned in this budget. Number 1, PM Gati Shakti. Second, inclusive development. Third, productivity enhancement and investment. Sunrise opportunities, energy transition and climate action. Fourth, financing of investment. So what are the key highlights? So the big focus of the finance minister's speech was big boost to capital expenditure. Capital expenditure to be step up by 35.4%. Outlay for capital expenditure to be up from 4.54 lakh crore earlier to 7.5 lakh crore in 2022-23. As you can see in the graph, the contribution of budget toward capital expenditure in blue dotted line is raised and revenue expenditure versus total expenditure is declined. PM Gati Shakti is one of the priorities. So under the PM Gati Shakti program emphasized 7 growth engines: roads, railways, airports, ports, mass transport, waterways, logistic infrastructure. National highway network will be expanded by 25,000 km in FY23. Rupees 20,000 crore will be mobilized through innovative way of financing to complement the public resources. ECLGS scheme, Emergency Credit Line Guarantee Scheme for MSME, micro, small and medium enterprises, extended to March 2023 and expanded. Added cover of rupees 50,000 crore and total cover now at rupees 5 lakh crore. She also mentioned that Special Economic Zone Act to be replaced with new legislation. It will cover all large existing and new industrial enclave to enhance competitiveness of exports. Further, the announcement on crypto provision. Any income from transfer of any virtual digital asset to be taxed at 30%. No deduction on any expenditure or allowance other than cost of acquisition. TDS at 1% above certain monetary threshold. According to our finance minister, currencies should be issued by only government. All other thing will fall under the asset. So cryptocurrency should be considered as a virtual digital asset only. After this announcement, many people thought that cryptocurrency may be legalized, but on next day, our finance secretary announced that Bitcoin, Ethereum and all other cryptocurrency, including NFT, non-fungible tokens, will never become legal tender. They will never be legal, but still government will collect taxes on the profit and transaction. Further, this government announced that RBI will issue digital currency in FY23. Now the question is, what is digital currency and what is digital transaction? So friends, if you want to know more about this, give your comment in this video and I will reply you. Announcement regarding post offices. 100% of India's 1.5 lakh post offices will be onboarded on core banking system in 2020-22. This is a fantastic decision by the government, the best utilization of the capital. Current coverage of Har Ghar Nal Se Jal in 8.7 crore of 5.5 crore households were provided tap water in last 2 years itself. Allocation of 60,000 crore has been made to this scheme in 2022-23. Housing projects allotted rupees 48,000 crore under PM Housing scheme. Government will build 80 lakh affordable housing. Under Atmanirbhar program, government announced that 68% of defense procurement budget earmarked for domestic private industry. So government will allow startups and private industry in this domain, and they will work along with DRDO. So what is our view on this budget? This budget is avoiding the pitfalls. Rather than the measures announced in this budget proposal, it is the things not done in the budget by the government that enthusiast the market. First, the government has avoided populism ahead of the state election, but enhanced the focus on productive expenditure. Second, it has avoided the temptation to further tax rich and wealthy to balance the skewed nature of the economic recovery. No additional tax burden as well as tax benefit has been imposed on the middle class. Third, the government has also not tinkered with long-term capital gain tax and has largely kept the tax regime stable. Last, the government did not take an aggressive stance on fiscal consolidation but has rather chosen to focus on aggressive supply side issue and increase spending on creating productive assets. This is the most important. Now, what is supply side reform government had taken, and that to drive long-term growth trajectory. The government continued its focus on supply side reform in FY 2023 Union Budget through incentivizing localization, supporting infrastructure creation for new industries and monetizing government asset. It has already implemented significant reform in past 3 years with the objective of ease of doing business. The most prominent one are reduction in corporate tax rate, simplification of labor laws, and incentives for domestic manufacturing through PLI scheme. As you can see in the graph, corporate India will become more competitive compared with other Asian economy in new regime. The older tax was 30%, is now 22% for most of the company and 15% for the manufacturing companies. Next, fiscal map. The government shows their mood swinging between conservatism and aggression. The dichotomy in this year's budget is the conservative 11.1% growth assumption in nominal GDP. But what is nominal GDP? It's real GDP plus inflation. And what is government expectation for real GDP? It's around 8 to 8.5% in FY 2023 and intense inflationary pressure. So I'm sure that the nominal GDP would be much higher than 11.1%. Accordingly, net tax receipt could be higher than the growth assumption. Thus, there seem to be level of conservatism built in growth assumption and expectation of revenue receipts in FY 2023. However, at the same time, the budget seems to be aggressive in its assumption of just 0.9% growth in revenue expenditure. The revenue expenditure adjusted for interest payment actually reflects a 4% decline. Added to this, the gross government borrowing figure of rupees 14.95 trillion and net borrowing of rupees 11.1 trillion. that is far ahead of expectation. So this government is not worried about their fiscal deficit. Their complete focus on capital expenditure and growth of the economy. The surge in government borrowing could put pressure on interest rate and crowd out private sector, and this worry was reflected in spike in the bond yield. You can see in this graph. Now the most worry, because announcements are fantastic, but how much they will realize on the ground, and what are their past history of the government. State have been unable to spend, as you can see in the graph. In FY20, budget estimate was higher compared to FY20 revised estimate, and actual expenditure in FY20 was much lower than budget estimate. The same trend was observed in FY21. So the actual increase in spending by the state was much lower than budgeted in FY21 and is likely to be similar in FY2022 as well. Excluding salaries, pension and interest, the rise may not be much. The challenges for state governments has been in execution, not availability of fiscal space. Now our view on market. So government focus back on corporate earning. Besides the push to infrastructure and go green spending, the budget also announced measures to support manufacturing sectors, extended ECGLS emergency credit line guarantee scheme benefit to stress sector, and press the button for the digital revolution in the country. Overall, it reflects the government's stance on nurturing the economic revival and put the Indian economy on a high growth trajectory. So friends, I appeal all of you, if you like the video, then press the like button and also share it with your friends and family so they will also get benefited. Before going further, I want to announce disclaimer that the sector and companies mentioned in this video are just for research and study purpose. There is no recommendation from my side. It may possible that I or my family member have stake in any of these companies. So friends, take advice from your investment advisor before going through any investment decision. Now first sector which will get benefit from the budget is agrochemical and fertilizer. For the agriculture sector, the budget focus on 1. Increasing allocation toward the irrigation infrastructure, startups for agriculture and rural enterprise to drive the sector, and third, lower dependency on import in agriculture produce. Fertilizer subsidy at rupees 1052 billion for FY23, cut by 25% versus rupees 1400 billion in FY22 revised estimate. Decline in budgeted urea subsidy in an inflationary environment means companies will have lower subsidy receipts and higher accumulation of outstanding subsidy. This will increase working capital and interest cost. So these announcements are positive for Godrej Agrovet, neutral for Coromandel International, and negative for Chambal Fertilizer and RCF, Rashtriya Chemical and Fertilizer. The second sector is automobile. The government will step up initiative to boost electric vehicle infrastructure and electric vehicle ecosystem to achieve its broader decarbonization goals. Push toward infrastructure including economic corridor, roads and manufacturing to help lift demand for heavy and medium duty commercial vehicle. Because of space constraint in urban area, for setting up charging station at scale, a battery swapping policy will be brought out and interoperability standard will be formulated. These announcements are positive for Ashok Leyland, Tata Motors, Hero MotoCorp because tie-up with Gogoro for battery swapping, Amar Raja Battery, Exide Industry, Minda Corporation, JBM Auto, Electra, Greentrack. The next sector is BFSI, Banking, Financial Services and Insurance. ECLGS will be extended up to March 23 and its guarantee cover will be expanded by 50,000 crore to total cover of 5 lakh crore. Credit Guarantee Trust for Micro and Small Enterprises scheme will be revamped with required funds infusion. This will facilitate additional credit of rupees 2 lakh crore for MSME sector and will expand employment opportunity as well. Raising and accelerating MSME program with an outlay of 6,000 crore over the next 5 years will be rolled out. Higher fiscal deficit projections have adversely impacted bond yield and could drive higher MTM provision for banks, mainly PSU, on their investment portfolio, as well as lead to higher borrowing cost for NBFCs. 8 lakh houses will be completed for identified eligible beneficiary of PM Awas Yojana and rupees 48,000 crore is allotted for this purpose. The announcements are positive for Kotak Mahindra Bank, ICICI Bank, Axis Bank, SBI Life, SBI Bank, HDFC, Muthoot Finance, Mannapuram Finance, LIC Housing Finance. The next sector is capital goods and infrastructures. Increase in budgetary allocation across defense, railways, RE transmission projects, smart cities, water and waste projects, etc. Roads capex remain flattish while railway witnessed satisfactory growth. Third, defense capital outlay raises 10% year-on-year to all-time high to rupees 1.5 trillion in FY23 budget estimate. The announcements are positive for L&T, Siemens India, CG Power, BEL, KNR Construction and Polycab. Next sector is cement and building materials. Higher spending on roads and railway is likely to generate incremental cement demand of around 18 million ton. As per FY22 revised estimate, fund allocation under Pradhan Mantri Awas Yojana for urban grew 29% year-on-year. It has also increased the allocation of FY23 budget estimate by 4%. Expenditure here has grown at a fast pace in past 4 years. Total fund allocation for Ministry of Jal Shakti increased to rupees 60,000 crore, 33% above than FY22 revised estimate. From FY22 onwards, the government has increased focus on this mission. Announcements are positive for Ultratech Cement, JK Cement, Dalmia Bharat, Apollo Pipes, Finolex, Supreme, Astral and Kajaria chemical sector. Basic custom duty on methyl alcohol has been reduced from 5% to 2.5% and on acetic acid has been reduced from 7.5% to 5%. Methyl alcohol is a key raw material in manufacturing of methylamine and their derivatives. Acetic acid is the key raw material used to make acetonitrile. So announcements are negative for GNFC, who is involved in production of acetic acid, and positive for alkyl amine, Balaji amine, Lakshmi Organic and Jubilant Ingrevia. Impact on consumer and retail sector. Construction of houses will help drive consumption of discretionary FMCG products like paints. Lower tax rates should aid gems and jewelry sector as a benefit are likely to be passed on the customer. No change in excise duty on manufacturing of cigarettes and reduced custom duty on cotton from 25% to 5%. These announcements are positive for ITC, Asian Paints, Pidilite, Page Industry, Trent, Nestle and Titan. IT sector. Rupees 70 billion allocation of BharatNet project for creation of telecom infrastructure required for providing broadband connectivity to all the Gram Panchayats. Data center and energy storage system will be given infrastructure status to provide easy financing to the sector. 400 Vande Bharat trains with better energy efficiency and passenger riding experience will be developed and manufactured during the next 3 years. Issuance of e-passports using embedded chip and futuristic technology to be rolled out over 2022-23. 1.5 lakh Indian post office to be connected through core banking system. This will aid in the service of IT services. The government plan to bring post office accounts under digital networking. These announcements are positive for TCS, Infosys, HCL Tech, Wipro, Gensar and IRCTC. Now logistics sector. Scope of Gati Shakti will be encompass seamless multimodal connectivity and logistic efficiency. Focus will be on planning, financing, speed of implementation, use of technology will result in logistic synergy and help in raising productivity. Development of 100 new cargo terminals over next 3 years. And last, warehouses to be built on outskirts of major cities along highway and expressways. This would improve connectivity and lessen congestion in the cities. These announcements are positive for VRL, Gateway District Parks, Mahindra Logistics. Now metal sector. The continued thrust on infrastructure spending is positive for this sector. The sector did not witness any significant budget proposal that would have impacted on stocks, but the overall emphasis on capital expenditure by both central and state governments should boost demand for metals. Considering prevailing high prices of metals, certain anti-dumping on stainless steels and coated steel flat products, bars of alloy steels and high-speed steels are being revoked in larger public interest. Positive for SAIL, JSPL, Tata Steel and Hindalco. Now pharma and healthcare sector. Government spending on healthcare is 2.1% of GDP, which is significantly lower than the global average of 4 to 5%. Allocation of rupees 50 billion toward COVID-19 vaccine. This is positive for vaccine producing companies. National Telemental Health Program. These announcements are positive for Cadila, Dr. Reddy, Gland Pharma and Sun Pharma. Real estate sector. The central government will work with state governments to reduce time required for land and construction related approvals and promote affordable housing for the middle class as well as economically weaker section in urban areas. Real estate sector didn't expect much from the budget as the sector is seeing upcycle in demand, but raising interest rate may spoil the party. Positive for Kolte Patil, Prestige, Sobha and Kudraj Properties. Telecom and Internet sector. 5G to enable growth required spectrum auction will be conducted in 2020-22. BharatNet project contracts for optical fiber networks that are so far awarded as a EPC contracts, engineering, procurement and construction by government to cable manufacturers and EPC companies will now be handed out under PPP model, public-private partnership, with target to complete it by FY25. This could push telecom companies to intensify fiber penetration under government scheme. Next, setting up of an animation, visual effects, gaming and comic AVGC promotion task force. The central government is likely to infuse rupees 44,000 crore as a capital in BSNL. These announcements are positive for Bharti Airtel and Nazara Technologies. Thank you friends. If you like this video, please hit the like button and share it with your friends and family. Also subscribe the channel and If you have any comments, any query, and if you want more videos or any clarification or more understanding, please write in comment box. Thank you. Have a good day.